Did you know that the money in your pocket, in your bank account, and even in global trade is not backed by anything? No gold, no silver, no physical asset, just trust. It might sound shocking, but that's exactly how the modern financial system works. And understanding this is absolutely crucial if you want to protect your wealth, invest wisely, and build financial freedom, especially in today's world. In this video, we're going deep into how money really works, why the dollar is no longer backed by gold, and what that means for your money going forward. Section 1. How it used to work. The gold standard. For thousands of years, humans have used gold and silver as money. Why? Because precious metals have several unique characteristics. They are rare, durable, portable, and universally recognized. Gold, in particular, has been seen as a stable store of value for centuries. When paper money was introduced, it was originally a representation of gold or silver stored in vaults. This was called the gold standard. Every dollar printed was essentially a receipt for gold. If you held a dollar bill, you could walk into a bank and exchange it for a fixed amount of gold on demand. That was a powerful system of accountability because it forced governments to limit how much money they could create. They couldn't print more dollars unless they had more gold to back it up. In the United States, for example, 1 ounce of gold was fixed at $35 for decades. That meant every $35 circulating in the economy had to be supported by 1 ounce of gold sitting in the Federal Reserve's vaults. This provided a sense of stability and confidence. The public trusted paper money because they knew it was ultimately backed by something tangible. But while this system had stability, it also had major limitations. When economies expanded or when governments needed more funds, such as during wars or financial crises, they often struggled with the restrictions of the gold standard. You couldn't just create new money out of thin air to stimulate the economy or pay debts. Section 2. The end of the gold standard. The Nixon shock. Everything changed dramatically in 1971. This was the turning point that most people today don't fully understand. Throughout the 20th century, the United States had become the dominant economic and military power. After World War II, the global financial system was structured around the US dollar under what is known as the Bretton Woods Agreement. Other countries pegged their currencies to the dollar, and the dollar itself was pegged to gold. However, by the late 1960s, trouble was brewing. The US had spent heavily on the Vietnam War and domestic programs. Foreign nations holding large reserves of dollars started to worry about America's ability to back those dollars with gold. Some countries, like France, even began demanding gold in exchange for their dollars, draining US gold reserves. Faced with a looming crisis, President Richard Nixon made a historic decision. On August 15, 1971, he announced that the United States would temporarily suspend the convertibility of the dollar into gold. In reality, that suspension became permanent. From that moment on, the dollar, and by extension, nearly every currency in the world, became fiat currency. Section 3. What is fiat money? So, what exactly is fiat money? The word fiat comes from Latin and simply means let it be done or by decree. In simple terms, fiat money has value because the government says it does, and because people accept it in exchange for goods and services. There's no longer any requirement for dollars, euros, yen, or any major currency to be backed by a physical asset like gold. Governments and central banks can print as much money as they choose, limited only by political decisions and economic consequences. The entire global economy today functions on this system. When you deposit money into a bank account or get paid at your job, that money exists mostly as digital entries on a screen, not as physical cash or gold sitting somewhere. Only a small fraction of money even exists as physical paper currency. In fact, most of the dollars in existence today are purely digital. They are numbers created by central banks, commercial banks, and government spending. Section 4. Pros and cons of fiat money. Now, You might wonder, is fiat money good or bad? The truth is, it depends on how it's managed. The main advantage of fiat money is flexibility. During economic downturns, governments can stimulate the economy by injecting new money, lowering interest rates, and providing financial support. This was seen clearly during the 2008 financial crisis and even more dramatically during the COVID-19 pandemic, when governments worldwide pumped trillions of dollars into their economies to avoid total collapse. Without the restrictions of the gold standard, central banks can act quickly in times of crisis. They can prevent bank failures, support businesses, and stabilize financial markets. However, this flexibility comes at a cost. Because there's no physical limitation on how much money can be created, governments often print more money than the economy can support. This leads to inflation, the gradual loss of purchasing power. Over long periods, inflation can erode the real value of your savings and income. When managed poorly, excessive money printing can even lead to hyperinflation, where prices skyrocket uncontrollably, wiping out personal wealth almost overnight. History offers plenty of terrifying examples: Zimbabwe, Venezuela, and even post-World War I Germany, where people carried wheelbarrows of cash to buy a loaf of bread. Even in stable economies, persistent inflation quietly steals wealth from everyday people. A dollar today simply buys less than it did 20 or 30 years ago. Section 5. How much money has been created? To fully understand the scale of modern money printing, let's look at some numbers. Before the 2008 financial crisis, the total money supply in the United States was a fraction of what it is today. In response to the crisis, the Federal Reserve initiated quantitative easing, essentially creating new money to inject into financial markets and stimulate lending. During the COVID-19 pandemic, this money creation accelerated massively. In just a couple of years, the U.S. government and the Federal Reserve created trillions of new dollars to fund stimulus checks, business relief programs, and emergency spending. In fact, many economists estimate that roughly 40% of all U.S. dollars ever created came into existence between 2020 and 2022 alone. That is a staggering pace of money creation never seen before in modern history. And the United States isn't alone. Central banks around the world have adopted similar policies. As a result, global debt levels have soared to record highs, and the long-term consequences of these policies are still playing out. Section 6. Why this matters to you. So why should you care about any of this? Because the money you earn, save, and invest operates inside this system. Fiat currency, while useful, loses purchasing power over time. If you simply hold cash or keep your money sitting idle, you are essentially losing wealth every year due to inflation. This is why financial experts often recommend investing in assets that historically outpace inflation, stocks, which represent ownership in businesses that grow over time, real estate, which benefits from both appreciation and rental income, precious metals like gold and silver, which often hold value during periods of economic uncertainty, cryptocurrencies, which some see as an alternative store of value, though they carry higher risk, commodities like oil or agricultural products that often rise in price alongside inflation. Understanding how fiat money works allows you to make smarter financial decisions. You're not just earning dollars, you're earning pieces of a constantly shifting financial system. Knowing how to navigate that system gives you an edge in building long-term wealth. Section 7. The bigger picture. Now here is the part that few people think about. Fiat money systems only work as long as people continue to trust them. If confidence in a currency collapses, whether through mismanagement, runaway inflation, political instability, or loss of international credibility, the value of that currency can evaporate very quickly. That's why some investors, institutions, and even countries still hold large reserves of gold as a form of ultimate protection. Unlike paper money, gold can't be printed or manipulated by central banks. Its scarcity makes it a timeless store of value, especially during times of crisis. As we move deeper into the 21st century, debates continue over whether fiat systems are sustainable long-term, especially with rising debt levels, growing deficits, and increasing reliance on money printing to solve problems. Conclusion: the takeaway in summary, the US dollar, like almost every currency today, isn't backed by gold or any physical asset. It's backed by trust, confidence, and government authority. And while this system has allowed for unprecedented global growth and financial innovation, it also comes with serious long-term risks, especially if that trust is ever broken. Understanding how modern money works is one of the most powerful financial skills you can develop. It's not taught in school, but it's absolutely essential for protecting your wealth, planning your investments, and preparing for the future. If you found this video helpful and eye-opening, don't forget to hit like, subscribe for more finance content, and drop a comment down below. Did you know your money wasn't backed by anything? Let's start a conversation.